Good afternoon, ladies and gentlemen, and welcome to the DP Poland Trading Update Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and if you would give that your kind attention, I'm sure that would be highly appreciated by the company. And I'd like to hand over to the management team of DP Poland. Good afternoon to you all.
Thank you, Mark, and good afternoon to everyone, and good morning to some of you, because I think we have some investors from the US joining. So we're very happy to have you with us. As promised, we are in touch with you, and we will continue to have this sort of financial updates to give you a more insight into our business and the outlook. Today we have three presenters. You may recall me. I'm Przemysław Głębocki. I'm non-executive director of DP Poland. I was also nominated by the largest shareholder, a fund called AMC, that holds 45% of the equity. In addition to my role as a non-exec in the DPP, I'm also a board member and vice president of the Polish Private Equity Association. But I'm not the most important here. The most important are our executives. You may remember Gosia Podkańska, the CFO of the company, who is with the business already for quite some time. I will let Gosia maybe to introduce herself, but before we get there, the most important guy on this call, because he is our new CEO, Niels Gornal, the upcoming CEO. You see a little bit of the experience summary here, and then we'll discuss it in more detail. But maybe Gosia, you can say a few words about yourself, because I'm sure we have some new participants who didn't have a chance to hear about your background so far.
Yeah, thank you, my name is Małgorzata Podkańska. As Przemek said, the shortcut from my first name is Gosia. It's easier to pronounce. As Przemek mentioned, I'm with the company for quite some time, and now I started at Dominium in 2016 by becoming a CFO, and I became a CFO of the group, of the enlarged group, in March 2021. I started my professional career as an auditor at PwC. Afterwards, I was a financial controller responsible for systems and corporate reporting at Fox International Channels in Poland. Thank you.
Yeah, thank you, Gosia. Niels, a few words about yourself, because I think we have a separate slide about more details, but maybe as an introduction.
Yeah, hi everybody. My name is Niels Gornal. I'm Australian, 28th year in Domino's. Started working for Domino's when I was 15. So I've done this my whole life, 28th year. Franchisee at 22. Should I continue on, Przemek, or elaborate on the
details later on?
Okay, no problems.
Thank you, Niels. So moving on with the presentation, we wanted to share with you, or so talk through the presentation that was already published on the website, but we are happy to provide more color and background to it, and we'll be also very interested to get your questions that we will answer in the course of the presentation. So don't hesitate, feel free to ask questions, and then and I will read them loud, and then we will be answering those as appropriate, Gosia, myself, or Niels. We would like to comment on the 2021 financial performance. This will be covered by Gosia, but most importantly, give you a little bit of the update about the 2022 trading, which is very good. And then we wanted to share with you a little bit of a flavor of how the company is going. We want to comment a little bit about the growth potential and M&A opportunities. As you may have seen already from the article, from the news that was published, we have entered into commitment to buy DOMINO'S Croatia. We will comment on the closing timeline for that deal, and then also about the strengthening of the board, because it's not only Niels but also Andrew Rainey, and we have a slide about that. So without further delay, we can move on, and Gosia, I will hand over to you to comment about the 2021 sales dynamics and financial summary. Thank you.
Thank you, Przemek. So on this slide, we would like to show you how the sales dynamics in 2021 look like. So just to let you know, the operational merger was finalized in July. So the Q3 represents the learning curve, and Q4 is the first quarter of with full integration of the two companies after the reverse acquisition. This is visible in the rapidly increasing system sales as we observe the acceleration of top line. We defended like-for-like sales versus 2019 and 2020, although dine-in sales was still suffering from COVID lockdowns in first half of the year. Okay. On this slide, I just want to make a quick introduction on what are the numbers in the table. So system sales represents total sales of all stores, both corporate and sub-franchise. Revenue represents corporate store sales plus any other sales generated by the company. EBITDA has been adjusted by non-cash and non-recurring items, as a lot of those have been incurred during 2021. Regarding the 2020 numbers in this table, as per IFRS 3, it is Dominium SA who was the accounting acquirer. Therefore, the 2020 data in in published financial statements stands for Dominium SA only. To make the data comparable, we have prepared pro forma consolidation for 2020. As you can see, we do have a profit improvement, but it's still highly impacted by one-off costs related to the reverse acquisition. Moreover, macro environment represents adverse trend worldwide with high inflationary pressure and COVID restrictions still in place in the first half of 2021. But still, we managed to have food cost trending lower as percentage of sales. And we also achieved planned synergies and savings in SG&A expenses, which decreased from 18 to 14% of revenue. Yep. This slide is not that exciting. Again, 2020 data represents Dominium SA only, and all the increases in 2021 are a result of the reverse acquisition. Yeah, this slide is most exciting, and it's a privilege for me to talk about it, as it shows how dynamically our sales is growing in 2022. We are achieving double-digit sales growth every month since the beginning of the year, as you can see, with no perspectives to stop. We want more. What's even more exciting is that our delivery sales is presenting also double-digit growth despite the resilience of dine-in, which is exceeding 2019 levels, so the pre-COVID environment. Another encouraging information is that we also achieve dynamic growth in order count.
Yeah, maybe to step in here on my end, I think we are very happy also from the shareholder perspective that to see that growth rates, and that's quite inspiring because we are growing much faster than the market. But at the same time, we also know that there is much more space that we can grab and much more bigger market share. And that's why, even though the dynamics were positive and actually, as you can even see, accelerating, we were looking for a strengthening of the team. And already for quite some time, we were talking to various people just to bring additional experience to the board, also operationally. and hence you have Niels Gornal on the presentation. But before spending or giving voice, passing over voice to Niels, I wanted to talk about Andrew Rennie, because we have two high-level executives of Domino's. We were looking for the best talent globally in Domino's world. And one of the most renowned executives is Andrew Rennie, who was the CEO in Domino's Australia, which is one of the most successful markets globally for Domino's. But at the same time, Andrew had a lot of experience in running Domino's Pizza enterprises in Europe and covering the key markets like France, Netherlands, Belgium, and Germany. And it's also quite critical for us that in that role, Andrew was going through a number of acquisitions. And then we are acquisitive, as reported before. We are looking at some potential targets in Poland, and the experience of Andrew is very valuable for us. However, Andrew being very successful, it was very difficult to get his attention to Poland. We have rain, even though it's July. So the weather is not perfect, but Andrew works together very closely with Niels Gornal, and that is sort of the winning team that we are getting. So we are getting guidance from Andrew, but at the same time, on the ground, we have a very strong executive with a lot of experience in Domino's, and he is now our leader on the ground. And although it's only 2 months, we already see a number of very positive changes, and I think it's already Niels got very well integrated in the team. But I think I will pass over to Niels, because I'm sure you want to hear more from Niels than from me. So Niels, handing over to you.
Awesome, thank you. Yeah, as I mentioned, 28th year in Domino's. I first franchised my first Domino's store when I was 22. So I started off very young. It's been basically my only job my whole life. So I live and breathe Domino's. I own 23 very successful franchise businesses, franchise stores in Australia, winning many awards. New Franchisee of the Year. We won a Golden Franny Award in 2012 from Domino's Pizza International. In 2014, 2015, I actually owned 5 of the top 10 sales stores in Australia. I own number 2 sales stores in Australia. This store, I increased 3.5 times sales in a 4-year period before I sold the store. So I certainly know how to run high volume stores. What else can I say? Very proud of, I had 5 managers that became very successful franchisees in Australia. So that's something I'm very proud of. And in 2020, I moved to Croatia, and we opened up the new markets. It was a new market for Domino's. We now have 3 stores in Zagreb, and we've established a very strong brand, great team, and we continue to open stores in Croatia, and we have a very positive store rollout plan. I've come to Poland with lots of experience, runs on the board, especially with setting up high volume shops and running good EBITDA. So I'm ready for basically the biggest challenge yet. And that's me.
Moving on, maybe a little bit about Croatia. As you may know, Domino's Pizza Poland signed an agreement to acquire Domino's Croatia. This is a market with 3 stores. I will put a little bit of color on it, because our fund is operating in Central Eastern Europe. We have offices in Vienna, Budapest, Bucharest, Warsaw, and Prague. So the Central European market is quite familiar to us, and we did consider expansion of Domino's franchise from Poland to neighboring markets, because this is where we feel comfortable. And this acquisition came a little bit ahead of what we have planned, but it came also with some additional features that made it really attractive to us. One is that the market, this was the market that was partially owned by Niels and Andrew. So with this, when we started to talk to each other, we wanted to get their full attention on the combined business. We didn't want them to to split time between the two markets. So we wanted to have it all under one umbrella. So that made sense. That made also sense from our growth perspective, because I think Croatian market is very attractive. But one of the most interesting things is on this slide. I think this slide shows you the potential that we are trying to build in Poland, and it's quite inspiring to the team on the ground, but also I think for us as shareholders and executives and non-executives. Because we were always referring to Western European markets or global markets of Domino's, where Domino's was successful, and we were aspiring to get in that to those levels. You may remember that on previous presentations we were showing the EBITDA levels of other Domino's markets that were very attractive, and also the store penetration per capita. This was also very interesting to us. But we are also saying that this is our aspiration and inspiration. But then when we looked at Domino's Croatia, it's a market that is very similar to Poland in terms of the GDP per capita. It's actually lower GDP per capita. So the typical comment that one would get is that the different incomes has in translation into the overall profitability of Domino's, it does not hold. Because Domino's Croatia under Niels' leadership has revenue per store that are 2 times higher than Poland. And when we were saying before on the slide presenting the numbers for the first 6 months, we were saying we're happy to see those, but this slide is actually showing that there's much more potential for us to grab, and we are clearly getting into these numbers. So our aspiration is as presented here. This is on the top line, but that also has a translation in the bottom line and the profitability. We have performed due diligence. On Croatia. We have studied the profitability, and if you see that there is 93,000 euros of profit per store, and if you imagine the number of stores that we have in Domino's Poland, then you all of a sudden see the picture that we have seen when we did the deal. So this is where we are heading to, and this target is not as remote as people would think, because we have a guy on the ground who has built Domino's Croatia, and actually that business keeps growing. I think this is the slide where we would probably where you would like to hear more from Niels. I'm looking to the right because there are some questions coming up. So thank you for those. Maybe I will start some of the questions as they come. So and then I will try to allocate them to the respective people. Niels, the first question I see is to you. This is about the question is, what attracted Niels and Andrew to effectively invest in DP Poland by selling their existing business into DP Poland? Could you comment?
Okay. Yep. Okay. So Poland's basically one of the last sizable markets in Europe, not dominated by Domino's. DPE, the Australian company, operates in the European markets, and they've been very successful in France, Netherlands, and most recently Germany. UK and Ireland are also very successful markets for Domino's. So I know Andrew Rennie's been eyeing off the Polish market for a number of years, and finally the opportunity has arisen. I'm very bullish and excited about Domino's Poland. There's a big opportunity here, and I suppose Croatia really proved it to us. That Domino's can be very successful in Eastern Europe, and Croatia even has a lower GDP per capita than Poland, so it's very, very exciting. As Przemek mentions, I've moved to Poland. As most Australians, we love Europe, so I'm super excited to be able to live in Warsaw. It's a great city, very vibrant. It is summer, so I haven't experienced the winter yet, But so far so good. It's got lots of growth, attitudes clearly being driven by the younger generation, and it's a very exciting future for Poland.
Niels, I have two other questions. One from actually more, but there's a question from Tim and Richard. I'll read them. The first is, what is the difference between an Australian consumer and the Polish consumer? Why is Australia so successful, and why can you succeed in Poland? That's the first question. The other question that is, I think, similar comes from Richard. It says, do you believe that the Polish market is similar to other European markets where DPE have succeeded? Are there any challenges in the Polish markets that are not in other markets where DPE have been successful in? So comparing Poland to Australia, why do you think it can be successful, as Tim is asking, and as Richard is asking, maybe to other DPE to other European markets? If you could comment, please.
Yep, no problems. Look, I mean, it doesn't matter where you are. We all seem to have the same eating habits. Pizza is just as popular here in Poland as it is in Australia. So the only difference here is in Poland we are not number one yet, and it was the same in Australia. When I started, there was 90 Domino's, and there was a whole lot of Pizza Huts, and now it's completely opposite. So look, they're very similar markets. I see no reasons why we can't make this market just as successful. Domino's has come a long way over the years. We have amazing technology in our stores. Our menu and ingredients continue to get better and better. But at the end of the day, the pizza game is still driven by the basics. Deliver a great tasting pizza, deliver it fast, and deliver it with a smile. Doing the basics better is the key to this business. So I see no reason why we can't be just as successful here.
Okay, thank you. And maybe last question that I think would be relevant at this slide, again coming from Tim. What practical things can be done in a Warsaw store, for example, to get to Zagreb levels of revenue? So Warsaw to Zagreb, what do you think?
I would say it is, like I said before, doing the basics better. So, making a great product, delivering it fast. I mean, that is definitely the focus for me. Speed and quality is my biggest focus. Removing the bottlenecks in our stores here in Poland to allow staff to focus on the Domino's core beliefs. Simplifying our menu is definitely one thing we're looking into, so the team can focus on making great pizzas. The new stores we build will have faster ovens, like we do in Croatia. The new stores will have newly developed equipment, all to promote speed, basically. And also a different attitude in the store layouts to encourage faster times. I mean, basically in the pizza game, every second saved in this business equals more customers and more profits.
Thank you. So maybe moving on, I see some other questions coming also about the franchise business and corporately owned coming from Simon and from others, but I will keep them for later. Then about the improvement in profitability. Gosia, could you comment on this slide, which is about tackling the inflation?
Yeah, thank you, Przemek. So as I already mentioned, the high inflationary pressure was impacting 2020. Unfortunately, this is still in place for 2022, but we have tools to mitigate that. We have already implemented 3 price increases in 2022. We're also seeking for solutions for food cost reductions through recipes review and changes of suppliers. The costs are also our point of focus. So we are also looking for savings in deliveries through, for example, refurbishment of scooters fleet to reduce the costs of maintenance of the fleet, and also implementation of dynamic minimum order value but we are also promoting dine-in and carry-out offer, as they don't incur delivery costs. Yeah, and continuing to new stores openings in June, as promised in one of our announcements, we have opened 2 new stores, which presented excellent sales in the first weeks of operations. The stores were opened in Siedlce and Szczecin, 2 totally different Polish cities. Siedlce is a rather small city with 80,000, approximately 80,000 citizens, and we were not present in that city before. We were already present in Szczecin, but both stores presented excellent sales. So this, especially Siedlce, is encouraging us to look for new premises in smaller cities in Poland.
Yeah, if I can add to that as well. Yeah, look, the last 2 stores we opened have been very successful, and we're very proud of those openings. The Siedlce store, as Gosia said, is in a regional town, is a regional city. So it really proves the Domino's brand is strong, and we have the opportunity to open many stores in Poland, not just in the big cities, but in the regional towns as well. In Australia, the most successful stores are in the regional towns, so we're super excited about that. We plan to open the stores that focus on delivery, but also boasts a dine-in model that shows our brand is adapting to customer needs and value-driven dining. Our model allows for value for money pizza in an environment that's comfortable and looks great. I take great pride in building good-looking stores that suit today's customers' needs and style. And I've brought a lot of good ideas from the Australian model, and the stores we've built in Croatia as well. I mean, the 3 stores we have in Croatia look fantastic, and we have the dine-in model, and we do big sales out of dine-in as well.
Thank you, Niels. I'm also getting a question from Richard about the growth, whether this is organic or acquisition opportunities. Maybe I can comment on that. I think we are very disciplined in that sphere. We are looking at the return on the investment. We have both options still open. I think we are quite active in M&A discussions. I think this could give us an opportunity to accelerate our growth. As I mentioned, I mean, we have a entire course. We have a lot of potential to open new stores. But the recent openings are very encouraging for us as well. It seems we see that the economics of the organic growth are actually very strong for us. So we are quite happy about that, and we can continue with the rollout. This may be a bit slower than acquisition. I think acquisition will accelerate our growth, and that's why it is attractive. But acquisition comes with the conversions and merger, so there's an extra cost to it. So we are basically very disciplined. We are looking at the return on the investment that we have. Acquisitions, I think we give ourselves, there is no deadline for that, but I think we should resolve on that within by the end of this year. But if we don't see anything tangible happening, which can be the case, then we will progress with more aggressive rollout of our stores. And then this can take this can be with the corporate stores, but also through the franchise stores. And I see there is a question again also on the list. It's about actually I have 2 questions. One is about what's the ideal split between the franchise stores and corporate-owned stores. And then there is another question that I got from Richard. This was also about the DP Poland has a small number of franchisees as a percentage of the overall store count. My understanding is that the most Domino's chains worldwide owe a large part of their success to having a successful franchisee network. How and when will DP Poland expand the franchisee network in Poland, and what changes do they see, or do you see in attracting franchisees to take on stores? I would ask Niels to address this, but as an intro, I would only say that we're waiting with some of those actions regarding the franchise stores because we are actively looking at M&A, and it's easier to integrate with the acquired network if we have corporate stores. It's simply about delivery areas and basically redesign of the network. It's easier when we have corporate stores, but definitely our future is more on the franchise stores than it is now. But I will hand over to Niels. So coming back, what is the ideal split between the franchise stores and corporate owned stores, and also what are the lessons from other markets? Because there's a question from Richard on that as well. Niels, could you comment?
Yeah, no problems. Yeah, look, totally agree. Franchising our stores is a massive opportunity and will return great dividends. With great franchisees, you can really see accelerated growth, and that'll really cement a solid business model. When I started in Australia, like I said, there was 90 stores. Australia has over 700 now, 730, I think. And this was created by having awesome franchisees. And these franchisees came from store managers, pizza makers, delivery makers. The famous CEO, Don May, who's still with the Australian brand at the moment, he started as a delivery driver. So, and all the franchisees, all the good franchisees, they were all started as young guys in the stores. So basically, we will, we'll follow the same model as Australia, grow franchisees and grow the franchise business here in Poland. Basically, we'll set the standards in our corporate stores. And then allow our best managers and staff to franchise the business and start fortressing the market. It is a massive opportunity and something I'm very, very passionate about. Being a franchise owner of Domino's is awesome, and it's an amazing opportunity for young people to become entrepreneurs.
Thank you for this. Two other questions very related. It's about the financing of the growth, and it's coming from Richard and Mark. How to finance this? I think I can answer, but maybe Gosia can complement. What we have is we have a few levers to pull. One is, when we look at M&A, we are negotiating as a part of the deal that part of the transaction is financed with equity swap. It's because we want the shareholders who are selling also to have aligned interest with us, because there's always a process of conversion. So we would feel sort of more comfortable if the seller still had skin in the game. So that's not all cash. We could do all cash as well, because we have interest from individual investors, from various investors actually. I'm talking about more sizable investors, so the company attracts still a lot of interest. Thirdly, when we go for the sell down of the stores, as Niels mentioned, to the employees, that should also generate us cash. And fourth is about the financial institutions, right, Gosia? We got some. Like when we got now for the bikes or scooters, we got 2 offers to finance those, right, Gosia? You are on mute.
Yeah, no, just switch my screen. Sorry for that. Yeah, just wanted to jump in and what I can say is we are just finalizing financing for some new scooters with more options becoming available for us. So yes, we have access to bank financing.
Okay, thank you. Well, I will read a question from Richard, because it's also comforting. It starts with a lot of positives, so it's a pleasure to read. Thank you, Richard, for the good intro. The company has changed from organic franchise and own store strategy in Poland to significant merger with Polish restaurant business, to merging with Croatian business, dealt with pandemic, whilst first merger completed, and now sales growth is really impressive. Stock issued to new management at a premium, as was the capital raise to market, but the market has completely ignored it in terms of share price reaction. So key question, other than this investor webcast, what does the new management team plan to do to get the message to institutional investors to build real demand in the share price? By that, I mean pay for the research coverage by engaging other stockbrokers, get current broker to build better roadshows in UK, consider adding more investor relations consultancy to support to raise profile. All very valid points, Richard. I think I can cover this topic as like a little bit closer to the shareholders. Yes, it is irritating and frustrating to see the share price. We are focused on the long-term growth, and we think that the value will be unlocked in the mid-term, maybe not even long-term, but not in the short term. And it's frustrating to see that 300 shares are setting the closing price and it's set low. And we want to do more and more about that. We have new board members, non-executive level, non-execs, Peter Fullock and Jeremy Deeb. They are not, of course, executives, but we are learning from their experience. They are very experienced investors in public markets, and Jeremy is the head of investor relations in another company that is also doing this quite successfully. So we are doing step by step, as you noted. We had a lot on our plate, and we are still looking at M&A. So that's, I think, the key thing is to have the sort of the core fixed and done. But we're not forgetting about the marketing side of what we are doing this. So that's why we have this webinar. I think we will be participating in some small cap conferences. One is to come in September, organized by Zingers. So we want to be present there. We started running some press articles. We have set up Instagram account. So there's more coming, but please, we'll ask for your patience because we are still getting there. We are still a small business. So we are very disciplined on the cost, and we are trying to not to waste money. Well, not to spend money which doesn't really bring us, the benefits. I think when I'm talking to Niels about buying a coverage, and Niels would tell me about how many scooters he could buy. So we try to be very disciplined and look at every euro because it's our money, it's your money. So, but we're definitely not sort of ignoring this, and I promise we'll be doing better and better. I think there is some progress already, but we could go, we could get even better than that. There are more questions coming from Mark, but maybe we could go and also from the others. So nothing is left unanswered, but we can maybe move on. To come to the end of the presentation, and then at the end we can go through all other questions that I think are coming, but I cannot be attached to the particular slide. This slide maybe I can cover as well. This is a bit about Patricia. We have a new opening in marketing. I think with Niels coming on board and seeing that we're growing very, very fast and having a bigger ambition, we thought we should also strengthen the sort of the strategy for the marketing. And I think Patricia started with us in May, and I think it was a really flying start and strong start. So we're not forgetting about this. It's about the corporate identity, the brand recognition. We intend to go very, very aggressive campaigns, marketing campaigns, and we need to have the best talent on the market possible. So that is what we wanted to comment on. Maybe a little bit about the outlook, maybe, and then we can move back to questions because there are still questions coming. Niels, maybe there were questions about the difference in CROATIA, but there are also questions. I think I saw questions about your 6 to 12 months quick wins and the way what quick wins you can get in 6 to 12 months, what you can implement, and what opportunities you can see. Please be mindful, Niels, that our competitors are watching this, because I saw on the list that our competitors are watching this, so don't give them free advice.
Look, like I said before, doing the basics better is the key. My focus has always been on fast delivery. making really good pizzas, and the secret to this is having amazing staff and franchisees. Word of mouth advertising is vital in the pizza game. If you can deliver a pizza in 15 minutes, the customer will be impressed and they will tell their friends. The pizza will be steaming hot and it will taste amazing. But if you deliver a pizza in 30 minutes, that customer is not going to be spreading the Domino's love. 30 minutes is normal, and we here at Domino's are certainly not normal. That's probably all I can really say on that.
Okay, thank you. I mean, on the M&A, here on the outlook, I did mention that, so that's on the sort of more strategic level. We are actively looking at M&A. We have some progress, but we need to be very disciplined to look, that we are using our capital wisely, and also we are encouraged by the new opening. So I think we will see what the next weeks or months bring. We are actively working on it. This can accelerate our growth, but our growth plans are anyway unchanged, and we will do it one way or the other. Now there is a question coming to, well, this is primarily addressed to me. It's about the largest shareholder. What is the level of patience or timescale on this investment? This I can cover. I was always saying that this is a 3-4 year investment for us from the outset. We see the potential of the market is for 500 to 600 stores, and we said within our sort of we want to double the store count, and for that we need we need 3-4 years. Now it's 2 to 3 years. This can be organic or acquisitive. So this is our time scale. There's a question about the patience. We are very patient in terms of the stock price, which is frustrating, but we are very about growth of the business. So that's why when we saw the growth levels of sales of 20-30%, that's normally great, but we think we are impatient. We want more, and that's why we have Niels and Andrew to help us to double the business. But from the investment perspective, we have time. We are not in a rush. There is a suggestion from Richard, but Richard, it's about the more media coverage. But if you don't mind, I will sort of take it offline. Because it's about, thank you for the hints about the media coverage and investor relations coverage, and yeah, we'll tackle this. There is a question about access to finance, but we have covered this. There's a question to Gosia. Well, there's a question about the financial forecast with investors for this year and for the next year. So maybe Gosia to you.
So actually, it was not our practice so far to publish any forecasts for investors, and we do not intend to change. We are currently focused on client acquisition.
Okay, thank you for this. Question from Mark. There will be natural economies of scale as the store estate grows. How do you see the balance between prioritizing immediate store growth, fortress building, and longer-term margin expansion? Well, I can cover this, and then maybe I hand over to Niels for more details. I would say that at the moment, the key objective, at least from my perception of the shareholder value, is to fortress, exactly as you say, Mark, to fortress the market and the local markets where we are present. As you know, we are dominant in the biggest Polish cities like Warsaw, Wrocław, Kraków, and the others. But with the 30% growth that we have, you can imagine that our competition suffers. So that's why we have some of our competitors who subscribe to this webinar. But we are taking the market share from other people, and we want to double the sales. So for the moment, for the time being, we are prioritizing customer acquisition, building the top line, and then profitability will continue. So that's our focus. That also refers to the question about the patience of the largest shareholder. I think we are looking here at a little bit longer story. This is a growth story here. It's not like other Domino's markets where you can sort of dividend out because there's not much space to grow. I think we have a lot to gain on this market. We can multiply the network, we can grow the profits, the profitability per store, but this is step by step, and economies will come. We already see economies coming on the supplies, so the supply chain. We can see economics on the advertising and so on. But maybe Niels, I mean, commenting on how would you prioritize store growth versus profitability? What's your view?
Yeah, definitely. Yeah. Look, growing market share and store count in Poland is definitely my number one priority. It all depends on the success of the M&A, as you mentioned. Yeah, look, if we don't go through down that road, then we'll roll out a fast store build rollout. So like I was saying before, the CROATIA is a great example of a city, 80,000 people, and that we can open up very successful stores. So there's many cities like that in Poland, and also see lots of opportunities in the bigger cities as well. The successful Domino's markets continue to split their stores and add more stores into the city areas. If you cut your delivery area in half, not only are you reducing your labour costs, but you're able to deliver the pizza faster and hotter, and then sales and customer growth increases. So and I suppose the big one is competitors struggle, and they find it hard to compete when they have so many Domino's stores around their one store. So in Australia they have 26 million people, over 700 stores. Poland has a population of over 38 million people, so you can see the potential.
Thank you, Niels. Somehow I cannot turn on my camera, so apologies, but I'm still around. There's a question about the stock option plan, because it's about, I will read the question. Have Niels and Andrew any short-term operational financial targets that they can share with us? I would say that there are targets as a part of the stock option plan, but there is and we cannot share those, but there are targets. But I think the most important is that when I was negotiating with Niels and Andrew, the most important thing to me was that they also have skin in the game. So this is happening as we speak. Niels and Andrew will become the shareholders of DPP. It's in days, so maybe I will comment why it's not done yet. And they are also investing in their savings, and Andrew is has committed to subscribe for €500,000 of new shares at 8 pence. As you may remember, we treat 8 pence as a cost of our investment, and the price of the shares is below, but the trades are low, and it's a little bit frustrating. We cannot buy as the largest shareholder because we would need to call for all the shares. But the deals with the management team and Andrew and Niels are at 8 pence, plus they invest their own money. So that gives us a lot of comfort that we have the same objective and we all share the same ambition of multiplying this business value, because this is where people make money, and that's the way to develop. Then we have the short-term goals, but the most important is the mid-term value creation, long-term value creation, and the two gentlemen have put their money to work with us, and it's alongside the investors like you and us. So I think that's the most important thing for us. So I think we covered that. The question about from Richard about inflation again. So I would refer to Gosia. In current cost inflation environment, are you able to pass through via price increases and still grow sales?
Yeah, I wanted to answer that. Thank you, Przemek. So as I already said, We have already increased our prices 3 times in 2022 with last price increase made on 12th July, so like 2 weeks ago. We are very careful with price increases, and the sales increase that you could see in one of those in one of our slides, the double-digit sales growth, is being achieved despite the prices increases. We have different tools to do that. That is not a secret. We can and we use that tools. We can decrease discounts offered to our clients, but also increase menu prices.
Thank you, Gosia. I think we have exhausted the questions. What I see.
Shemek, let me just jump in. Absolutely, you've taken every question from investors that have come through throughout today's meeting. So thank you to you, and also thank you for the engagement shown by all the investors on today's call. Shemek, I don't know if there's anything further that you wish to add, but I do know that investor feedback is particularly important to you and the management team at DP Poland. I will redirect investors to give you their thoughts and expectations. But I thought before doing so, if I could ask you for any closing comments.
Yeah, thank you. Apologies, I still cannot turn on camera, but I think to me, I would hand over for the closing comments for Niels. I'm very excited that we have Niels and Andrew in the team. So the team is even stronger. You could see the performance of the team in the shape prior to Niels and Andrew arrival. I think the performance should be even better. So I'm quite happy about that. We're growing very nicely. We are prioritizing the client acquisition and the top line growth because we think there's much more that we can gain. But maybe the closing remarks I would give to Niels, because he is our boss here on the ground. Niels.
Yes, thank you. Closing remarks. Look, I suppose I'm really excited about the sales this year, and look, they keep on getting better. What really excites me is the customer growth we are seeing. You know, I always judge my stores on customer growth, as this is a sign of a strong business that's going in the right direction. So not only we double-digit sales, but our customer growth is also very strong as well. So as Shemek mentioned, I've invested 100% of my Croatian equity into DPP at 8p as well. So I have skin in the game. I'm very excited to be here. It's been a very positive start as CEO in the last 2 months. Received lots of great feedback from staff and peers, and we're having lots of wins. So just really excited about the future.
That's great, Niels. Thank you very much, Shemek. Nice to just get you back for those closing comments. So thank you once again to the entire management team for your time this afternoon. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure, as you've heard already, that will be highly appreciated by the company. On behalf of the management team at DP Poland PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and may I wish you all a very pleasant afternoon.
Thank you all.
Thank you, everyone.